And now to the Fed, which today released the minutes of its last meeting, where policymakers decided to hike interest rates. But as Steve Liesman reports, not everyone was on board.
Minutes to the December meeting, where the central bank controversially raised rates for the fourth time in a year, showed Fed officials were already thinking about bringing a halt to their hikes. In fact, minutes show some members even opposed the rate increase at the time. In the end, the Fed decided to hike based on strong economic and jobs data. Despite the sell-off in the market and rise in volatility, the minutes show officials still expected growth to remain above trend this year and that more hikes could be coming. But Fed officials tried to tweak the language of their statement then to indicate that future hikes were much more dependent on economic data than they had been. It didn't work at the time. In the wake of the meeting, the Dow Jones plunged 2,300 points, or nearly 10% over the ensuing weeks, before clawing back most of the post-Fed meeting loss. But it took soothing comments from Fed Chairman Jerome Powell just this past week, suggesting the Fed is more flexible on rates than markets thought. Several Fed speakers on Wednesday emphasized this new patience. They said they're likely to hike, but we'll wait to see whether the pessimism in the market or the optimism in the data wins out this year. For Nightly Business Report, I'm Steve Liesman.